Hi, I'm Patu from freefincal, and in this video, let's take a look at the new multi-asset from Motilal Oswal. When you look at it, it sounds immediately intriguing. Oh, it's going to invest in S&P 500. Oh, it's going to do tactical asset allocation and so on. But you had to calm down a bit and understand what's happening. So what is this fund? So it's going to be, it's a multi-asset fund, and according to SEBI, a multi-asset fund will have 3 asset classes, 10% of 3 asset classes at all times. And SEBI does not want to classify international equity as a separate asset class, so it's part of the equity basket as far as SEBI is concerned. So this fund will have anywhere between 10 to 50% in equity. Out of that, 0 to 20% would be the S&P 500 index, 40 to 80% would be in bonds, and 10 to 20% would be in gold. So this would be a non-equity fund with respect to taxation, and which is basically like a debt fund. Now AMCs use amusing words to phrases to justify their product. So in their presentation, they are claiming in order to justify this non-equity taxation, they're saying taxes are a happy outcome. So next time you pay tax, please tell yourself taxes are a happy outcome. And they say it's asset allocation done for avoidance of taxation can result in avoidance of gains, blah 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 blah, and all that. You can read that. So next time you pay tax, please tell yourself taxes are a happy outcome. Though AMC has said that. And then if you look at the scheme presentation of the dynamic fund, it will say the most beneficial part of a dynamic equity fund is that you get the best of not only do you get the best of equity and debt market, but the tax treatment is that of an equity fund. Hence, safety of a debt fund without the high tax implications. So for this fund, paying equity like tax is very important. For that fund, taxes are a happy outcome. If you get extra gain, you should pay more tax. It's shambolic. I've been saying this many times before, like I said in the last time. For the quant fund also, it's like saying when you project, it's like a parent having multiple children, and when the guest sees one child, he say this is my best child, and then you call the next child and say this is my best child. This is crazy. I mean, it just tells you that they don't have any holistic investment mandate. They're just in it for the money, and it's just awful, right? I mean, everybody is in it for the money, but I would be happy if an AMC says, look, I have 4 funds, and these 4 funds are different, and these 4 funds are for the 4 different types of investors. I mean, as an example, it's just annoying. Alright, so where will the scheme invest? That depends on what you look at. If you look at the scheme document, it will tell you it can invest across market capitalization levels and sectors. But if you look at the scheme presentation, it will say it will invest in large cap oriented stocks with bottom up stock picking. Of course, bottom up stock picking is there in both documents. And if you look at the scheme presentation for the bonds, it will say very high credit quality, predominantly investing in AAA securities and PSU bonds, G-Secs, and T-bills, blah blah blah, etc. But if you look at the scheme document, it will say the fund shall invest in various types of permitted debt instruments, including government securities, corporate debt, other debt instruments, money market instruments, blah blah blah, everything under the sun. For the scheme document, which is the only legally binding thing, they will basically put everything under the sun and write all kinds of fancy statements in the scheme presentations to fool investors. I mean, SEBI does nothing about this. I'm not saying they won't do it. That's fine. If you are so sure that you are going to predominantly invest only in AAA securities, have the guts to put it in the scheme document. Have the guts to say I will invest only in predominantly large cap stocks in the scheme document. Why are you not putting it there and only putting it in the scheme presentation? That's what I'm angry at. I'm not saying they won't do it, but if they have the conviction to do it, and that's what all AMC is all about. They have conviction and all that. No, they should put it in the scheme document. But no, this is just. And why are people asking, oh, there is this new NFO, shall I invest in it? I mean, honestly, you tell me, you look at the mirror and ask yourself, am I really financially literate? Why am I doing it? I am doing it for views. I am a blogger. I know people will watch. I am peddling financial porn. That doesn't mean you should watch it. You should read it. You should be asking about it. Please. You don't need any new NFO. Everything has been done. And oh my god. What is the investment strategy? So this says, in addition to this multi-asset drama, it will have one more subplot using the Motilal Oswal value index, which is a combination of the Nifty, PE, PB, dividend yield. I have a post on this, you can have a look at it. They will change the equity debt asset allocation, and I have an indicative asset allocation table where they will kind of hold about 10% gold, 10% equity, international equity, that is the S&P 500 index as of now, and they will change the equity and debt according to the market conditions and so on. They could have added this 10% S&P 500 into their dynamic equity fund, and then it will be a lot more enticing for investors for the long term. This fund will be generally less volatile. I agree with that. That's what they claim. I also agree with that. But if you are going to take on less volatility, that doesn't mean you're going to get more returns. And over the long term, if I have to choose between their dynamic equity fund and this fund for long-term goals, automatically dynamic equity fund becomes a better choice. Between those two funds, I'm saying. Don't say I'm not recommending that. I'm saying between those two funds from the AMC. If somebody has some, I love this AMC, I'm going to put all my money in there, then you can see for long-term goals, you're going to. For short-term, this multi-asset will be too risky. So, who should invest in this fund? Nobody. That's the simple point. Bye-bye.